Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. Well, look at this day. Capitulation selling in effect. That is the theme of the day. It's been the theme for the past 2-3 days, let's say a week. Okay, since we got a narrative change right here. About a week ago, we got a narrative change that everything is amazing to right now, inflation is going to kill us and these markets are going to tank and hikes are going to destroy everything. Okay. Today is Tuesday, just Tuesday, the 9th of June. That's it. But look at this huge move. Okay. We opened up high and then boom, we dropped all the way down to 725. As we suspected, we covered the 725 gap and then boom, bought back up. Okay, we're gonna get to capitulation selling and everything that implies, and what I think going forward. Meaning that, do I think it's over? Is it going to continue? What do I expect to see? And a couple of trade ideas setting up that I like. Okay, so first, we always talk about the technical picture, guys. It's still bullish despite what you feel. How do you feel? Said Bruce Lee. It's still bullish. We're still above the 50 here and the 200. We almost touched it. We covered the gap at 725 as mentioned. Yes, we're below the 20 moving average, but I don't look at that. That's very short term. I look at the 50. And we almost touched it. Okay, could we go back there? Maybe, but so far, the technical picture that I see is still bullish. Okay, and this wickiness of this candle is very bullish. Okay. And for me, like, the technical picture is still bullish, but it all depends on whether it stays that way. Depends on what happens tomorrow when we get the CPI inflation figures. Okay, and Thursday the PPI. Okay, we have two minefields. Okay, CPI and PPI. But so far, technical picture, guys, still bullish to bend them, no matter how you feel, and it felt ugly. Okay, let's get with the sentiment. This is important right now. Okay, we're into fear. We were really almost on the border. We're like at 29, then we came back to 33. Fear. The momentum is back down to neutral. Look, everything now, we have extreme fear in the breadth. The put-call ratio, remember yesterday was greed? And I go, that day, there was a crap load of puts being bought, and it will reflect as a time lag because it's a 5-day average. So in one day, it went from greed to fear because a crap load of puts were bought to like shifted into the fear camp. Look, everything is almost at fear. Okay, extreme fear. We're not. And despite all this, we're still not at extremes. Okay, we don't have to get to extremes, but it's beautiful that we do. It'll set something up for a much bigger move on the upside. Okay, so it doesn't have to. We went to 29, but I suspect that we might get to that extreme fear level coming up because the capitulation selling looks like it's over, but not quite. Okay, this wickiness looks very good on the candle, but the capitulation selling, let's get to it, not quite. Okay, because tomorrow CPI. Okay, so the May inflation numbers are due out Wednesday morning at 8:30. Here's what to expect. Okay, they're expecting 0.5% monthly gain. That's huge. Okay, if we just meet it, okay, it might be bad. Okay, if we beat it by, let's say we get 0.6, what is this? Over 4%. What is it? Close to 4%, whatever, yearly, if 0.5% monthly. So, yeah, bad. So 0.5%. If we get 0.7, yeah. So that's what I expect. Some kind of like two scenarios could play out. Either way, I'm still bullish in the longer term. Okay. The first one is that we destroy it like it's hot. Okay. I suspect we open down, we fill this gap again, and we could even go lower in 1 or 2 days, especially if the PPI coming Thursday is also bad. Okay. So we could still go lower. We're not yet finished because we are not at the extreme level yet. Okay. However, okay, that's my scenario for if it comes in hot. We're going to still go down. Okay. However, I don't think it's going to be short-lived. It's going to be really capitulation selling. It's going to be like everything. We're going to get into extreme fear. Everything's going to start rolling over, and even more puts will be bought. Okay. And we're going to get the VIX, which was high. It went above 20, but it's still pretty muted. Look. It went to like 23, but then back down to like 19, below 20. We didn't get these moves higher. We might be getting one of these things playing out, a spike up and down. And that will happen if we come in cold. If the inflation number is cold, we gap up here. We'll probably gap up and keep going maybe gap up around here and just stay there. It won't be amazingly high, but we'll probably gap up a bit and start drifting higher. Okay, that would mean that this would be the capitulation sell-off. I'm not leaning towards that because we didn't really get to extremes and people aren't really into the bearish camp yet, even though there are some bears. I would like it if we get one more leg lower, a capitulation type move, and people give up, because that would set up for a higher move. But this is what I expect to see with the inflation tomorrow. If it's cold, we gap up. We will open up and maybe drift higher, end around here, around the 745, 46, maybe 750. People are going to start piling on again. Okay. But I hope it's like meets it or slightly hotter than expected, and will go down. That will gap down, and it will really, really flush people out, and it will be really time to buy. I mean, I did buy a bit when it just kissed the 725, but not enough. Okay, not enough. I really didn't get in big time. Okay. In the SMH too, we saw the SPY, but the SMH, same thing. Look at wiki candle, but it never covered its gap at the 521 level. Didn't even get there. So this is still exhibiting a lot of strength, which is adding to this market breadth that's still at fear. So it's like the only sector, everything else is collapsing as this market is going down, but these guys are holding strong. The semiconductors are holding very, very strongly. So I suspect, like, even when the market goes up, I hope these guys don't lead as much. Okay, they just go up a little bit, maybe stay muted, while the rest of the market and the breadth here catches up. Okay, so that's the SMH is good, but not good because we want breadth to catch up. Okay, so it's still showing underlying strength. Okay, and the last really thing that the sector that I'd like to talk about, which we mentioned yesterday, all of this is playing out exactly like we said yesterday. Okay, we said that we didn't think the selling was done yet. We didn't get to extremes, and now we touched a bit, but still not at extremes yet. Okay, but let's go to gold. Okay, this is the most appealing chart to me here. We're closing below the 200. Very weak action. People still selling, dumping everything. Okay, they are dumping everything. So it's exactly what you want to see. I mean, if you look at the RSI, it's basically we don't have any positive divergence, but we do have positive divergence in the MACD. Okay, as you see, the price action is lower and the MACD is higher, so we're not quite there yet. There is capitulation. I can see hate in the space. Everything is being dumped. A lot of stocks, juniors that are doing well, have announced great results, and their press releases are down 35-40%. Okay, it's all because of the rate hikes. That's what they're assuming. But yeah, this is the devastating move right here in the gold sector. But remember, we talked about this before. Okay, if we go to the bullish percent, okay, we've talked about this before. Okay, remember last time we saw it, it was at 7. Look at it right now. This is a 1-year daily chart of the bullish percent. It measures, again, for you guys new, it measures the percent of gold miners in a point and figure chart that have bullish patterns, and it's down to 0. Okay, I don't think I've ever seen that. This is a 1 year. Okay, like look at 10-year chart, 0. Everything else, we had 3 or 4 like a month ago in March. We had a 3 during the 2022 bear market, and we had as low as a, what was it, 19-ish in 2020. Okay, so this is worse than 2020 in terms of the sentiment and the destruction in the gold space. Okay, this is why I like it so much. 0, no gold stock is showing a bullish percent. Is showing a bullish pattern. Okay. So this is why this is really, like we mentioned, capitulation in SPY. This is real capitulation in the gold space. Okay, real fear, and we're still at 4,200. Gold miners are printing money at 3,000, at 3,500, printing money, and yet look, the GDX is like, the fear is palpable. Even though the GDX today performed way better than gold, which is a great sign. Look, it went down and it's showing wickiness. Okay, it's down maybe like 1.3%, and gold is down 1.6. It should be. It's usually like the miners, if it's really bad, they're down 3 times the price of the gold move. They're down 3 times the percent of the gold move. So they should be down 3% now if it's real capitulation. But because so much selling has happened before this move. And like as the news is happening, as we're getting more and more like, the anticipation is higher interest rates means higher real rates. So that's bad for gold because it's not an income producing asset. Okay. I debunked that many times. But yes, real rates are important. Okay. But, gold is not a zero producing asset. It's, they're comparing it to the dollar, where the dollar you can earn an income from it. But, that's because the dollar you lent it out. That's why you're earning an income. That's why you're earning 5% if you have to lend it out. You have to put it to risk. Whereas gold, nobody's lending it out. You could lend it out, you're making 1-2%. But the point is, the miners are performing much better right now during the capitulation phase of gold because we're close to a bottom. So I say, we don't know how long, we don't know what it is, we don't know how low it can go. We might have gold here drop even down to 4,000. It'll be crazy if it does. Okay, but I see a lot of capitulation selling already. A lot of the damage has been done. Okay, I don't see much downside, but it's going to take, we mentioned it yesterday, months. Okay, it takes here. These moves, like it's tough to see it down because we're at 0, but after a drop down to sub 10 on the bullish percent index, it takes months before it goes to 50 or 70% again. Okay, months, 3, 4, 5, 6 months. Okay, so you have to look at this in a very, very special manner. Okay, this is the last thing I'm going to say. In this gold move, you have to treat it like you are a businessman, like you are accumulating inventory. Okay, like a market maker. Okay, when I used to work at National Bank, part of our duties was to become market makers for stocks. Okay, this was before the machines came in and took that role away from human beings. But we, as traders, we were assigned a number of stocks in the Canadian market, and we had to act like market makers, meaning that if everybody wanted to sell, we had to put a bid. If everybody wanted to buy, we had to put an offer. We had to constantly have a bid and an offer in the market. Okay, so when everybody was dumping, especially Canadian stocks, which could be very, very thin and illiquid, people are dumping their shares. I have to step in if I am the market maker of XYZ Canadian mining stock. I have to buy it, and I have to hold that inventory. I have to be the last bid there. I have to be the last liquidity. The last liquidity provider is me, the market maker. So by doing that, I accumulated inventory. I had many, many shares, hundreds of thousands of shares of a gold stock that I am the market maker of. And then later on, as the price improved, I could dump that into the market and make money. This taught me that in the gold space, you have to be patient. Okay, you have to be contrarian. You have to buy when everybody else is selling. You're accumulating inventory. You're like a merchant. Okay, but this inventory is not like a business. It's better because it doesn't cost anything to hold it. Okay, I can hold this inventory forever. It's not going to cost me like 5% a month or 2% a month or whatever it does to cost, whatever it costs companies to hold their inventories in storage for months. Okay. And the good part is that you can pick an asset to be the market maker of. I would love to hold gold as a market maker. I believe in this asset. Okay. It's not some crappy, illiquid Canadian miner that nobody wants, and I'm tasked to hold it. This is something that I really want to hold. Okay, so you have to think of it that way, that you're accumulating inventory when everybody else is dumping, when everybody else is fearful. You have to be greedy. And whenever everybody else is greedy, you have to feed them. Feed that greed by then dumping your inventory at high prices. Okay, think of yourself as a producer merchant type of situation. That's how you have to play it. Okay, you don't have a stop loss. Okay, if I were to play it, think of it, if you had a $100,000 portfolio and this is happening, I would dedicate 20% of it to this gold space, and I would be accumulating up to 20% of my portfolio in this inventory, whether it be GDX, okay, or GDXJ. I'm accumulating miners, and I'm putting 20% of it in my portfolio, and then I'm holding till they come back, okay? If they lose half their value, I lose 10% of my portfolio. And to lose half the value would be devastating. It's not going to happen. So your stop loss is the sizing that you step into this game with, okay? So you must be willing to take in, let's say, 20% of your portfolio in gold miners stock, and then hold it for the eventual up move after, if you believe in the space, which I do. Okay, the fundamentals have not changed one bit. They have gotten better in my view. Okay, so that's it. That's what I wanted to say. We're getting a little bit long in the tooth, but this capitulation selling is good. We are close to the end, especially for gold and the market as well. I would like for the CPI tomorrow to be a little bit hot so we can buy more, and then you'll see the exhaustion happen. You'll see, wicks like this trying to push it down. You see, trying to push it down, and then buying it up. Okay, this is what I expect to see. But if it comes in cold, that's it. This candle here will probably be the capitulation sell-off before we move higher again. And because we moved, this is like what, a 3% move. We were down at this 720. It's like 4.5% at 725 SPY. This is like a 4.5% drop in a week. Felt devastating. Now we're, I think, maybe down 3%. I don't know. I didn't do the math. Okay, but this felt like a devastating 10% drop. Okay, so yeah, because it fell so far, if we get a cold CPI number and the market starts moving higher, reaching the top is just another 23 points on the SPY. This won't even move this gauge to neutral, maybe neutral. Okay, so we have all of this other move from neutral to greed to extreme greed to not only go to highs, but to break it and go to new highs, which I suspect we do. Okay, so that's it, guys. Looking forward to what happens tomorrow in the CPI, the day after in PPI, and the rest of the week. Let's see how we fare when these two minefields are coming up. Later.